Fed Chair Jerome Powell has indicated that the Federal Reserve is likely to begin tapering sometime this year. He made this announcement at the Jackson Hole Symposium today on Friday. Here with us to discuss this monetary policy, Bitcoin, and of course gold is Professor of Applied Economics of Johns Hopkins University, Steve Hanke. Professor Hanke, welcome back to the show.
Good to be with you, David.
Good to be with you as always. Let's talk about the Fed first, and then also you have a very important announcement to make regarding your gold sentiment gauge, but we'll get to that later in the interview. First, I want to play for you this clip, and then we can talk about it. This is from Jerome Powell's speech this morning. Take a listen.
We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals, measured since last December when we first articulated this guidance. My view is that the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year.
So the first question I have for you, Professor, is given this announcement that the Fed is likely to, quote unquote, begin tapering later this year, why did the stock markets react the way it did, which is to rally? Wouldn't you expect the other direction to happen?
Well, no, because he was giving us a lot of Fed gobbledygook, and if you sift through it, he was basically very dovish. He said they were going to continue purchases of at the same level, and that means money supply expansion at the same level until further notice. I mean, that's basically what he was saying. Mm-hmm. So there was no tantrum because there was no taper, and the markets took it as very dovish. The dollar got a little weaker. Gold was up. It's up $25 where it was on the opening. The Dow's pretty strong, up over 250 points or something like that.
Right.
So the general takeaway is that the markets took it as no change. Don't worry, there's going to be no tapering anytime in the near future. That's basically what they said.
Yeah,
that's what they thought he was saying, and he was pretty clear, by the way, about it. Even sifting through that usual gobbledygook, he was saying, we're going to keep the accelerator right where it is until further notice. I'll tell you when we get there.
Right. I think the markets would turn south once I'll play the next clip soon, but once they the FOMC indicates they would begin liftoff, right? Because the Federal Reserve, the FOMC, needs to maintain asset purchases in order to keep the Fed funds rate at their 0.25% target. Is that correct?
Well, maybe not. You really have to be looking at the money supply. This is my old song. I'm a lot simpler to follow than Jerome Powell. It isn't interest rates. And it is the money supply. And the question is, when is the money supply going to start slowing down? Because the money supply rate of growth influences inflation. Now, he said, interestingly, in that clip, he essentially said, we've met our inflation target. He essentially said, we've solved the inflation problem. And now, we're just trying to solve the employment problem. So that is consistent with my view that their main thing they're looking at is employment. They're not looking at inflation. I don't think they understand inflation. They keep saying it's temporary, there's no problem, forget about it, so forth. In fact, the main thing the Fed should be watching is inflation. The main thing they're watching is the labor market. And by the way, another reason that I do think that they'll continue with this dovish approach is that if you look at the Atlanta Fed, the Atlanta Fed puts out something called GDP Now. And the GDP Now turns out to be a fairly accurate forward indicator of where the economy is going. And on an annualized basis, the real rate of growth in the economy has really been sinking like a stone if you look at the Atlanta Fed's GDP Now numbers. And if you look August 25, the annualized rate of growth they had for the end of the year, for this year, 2021, is 5.7%. 2 days later, they revised it, and now it's 5.1%. So it's substantially weakening. The economy looks like it's weakening now. And with that in mind, and with that heavy focus on the labor market, Powell is not going to let his foot off that accelerator. And I think the markets are kind of starting to interpret this and figure out what's going on.
Well, maybe another way to interpret that, Professor, is that the first quarter GDP growth was really high because of the base effect. But really, it's we're slowing down towards a more sustainable level of growth. Would you not say that this trend downwards is healthy? Or
I would agree with that. As I've indicated before, the potential kind of normal growth potential in the U.S. economy is just a shade over 2%.
Yeah.
So even 5.1, if that is the Atlanta Fed's current annualized estimate for 2021, that's still pretty hot.
It is, yeah.
5.1% is still pretty hot, but it's decelerating. That's important in terms of what the Fed is going to do, because I'm certain Powell is worried that the economy's slowing down on him, and he's going to be. Remember, he's coming up for reappointment, so he doesn't want to be rocking the boat too much, because if you rock the boat, what happens? You're just a target for anyone who doesn't want you reappointed. So steady as you go from his point of view is where you want to be.
Okay.
He would hope nothing would change in the picture, and bang, he's reappointed for another term by President Biden, and then he'll maybe start thinking about other things.
Professor Hanke, now Powell also did talk about how the labor market is making progress. I know you said that the labor market is not the key ingredient to look at when analyzing monetary policy, but he did say that we are on track to make improvements in the employment level. Now, I want to show you this chart. This is from the St. Louis Fed. Job openings have skyrocketed, as you know. I'm curious to how the unemployment rate is going to fall from current levels if none of these jobs are being filled up. What do you think?
It's going to be a tough act. I agree with your interpretation. By the way, I think you should be looking at the money supply, because it's the money supply that drives nominal GDP, which contains a real growth component and an inflation component. And the real growth component picks up the labor market activity and so forth. And inflation, of course, is inflation. That's what the residual is in there. And central banks really, I think, should be focusing primarily on inflation. And it's pretty clear to me he does not focus on inflation, neither do his colleagues, and that's what he said in the first clip. I mean, he said that inflation, we've solved it. Whatever he thinks they've solved it.
We're going to listen to the...
Inflation is running hot and high, and it will be sustained. It is not temporary, and it's not temporary because inflation is always and everywhere a monetary phenomenon, and the money supply has been growing over about 4 times the rate that it should have been growing to hit our inflation target of 2%. Now it's slowed down a little bit, and it's growing about double the rate, still double the rate that's consistent with a 2% inflation. So a lot of money juice is in the system, tremendous amount of liquidity in the system, and the inflation will not go away as Powell advertises.
That is a good segue to the next clip we're gonna listen to, and let's play this clip and then we'll comment on it.
The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We have said that we will continue to hold the target range for the federal funds rate at its current level until the economy reaches conditions consistent with maximum employment and inflation has reached 2% and is on track to moderately exceed 2% for some time. We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis.
All right, so he's basically saying they're not going to raise rates anytime soon because full employment has not yet been met, and he would disagree with your interpretation that inflation is not transitory. Well, at least that's how I'm interpreting his message. So what he's saying is that there's still some time there's still some time left to analyze whether or not inflation is here to stay. Now, it is interesting, Professor, because I don't think we've spoken since the last CPI number has been released for the July reading. It's also 5.4%, which is the same as the June reading. PCE actually has come down from the previous month as well. Some Wall Street analysts are speculating that inflation has peaked. CPI headline CPI has peaked at 5.4%. Would you agree or disagree with that statement?
I strongly disagree. I think they're delusional. They haven't looked at the money supply. That last clip. That, by the way. So what will inflation be? If I don't think it's peaked out, what will it be at the end of the year? It'll be between 6% and 9%. That's where I think it's going to be at the end of the year, due to this huge money supply injection that we've had. Mm-hmm. Now, that last clip that you ran is very interesting because Powell, he gets the federal funds in there. They're really interested when they talk about monetary policy. He's talking and focusing on interest rates. And the one thing that they learned, by the way, from the last time, 2017 to 2019, when they slowed down the rate of purchases and started shrinking, tapering and shrinking and tightening the balance sheet of the Fed, they had another rule for the interest rates. They said interest rates will have to be going up before we start tapering. Now this time, you see what he's saying? He's saying we're not going to do that. We'll decide when to taper, but it won't be subject to whether the Fed funds are going up or going down. In fact, he said we have a new, more stringent rule. So he thinks by changing the rule that we won't have a tantrum like we did in 2017 and 2019. Well, we will have a tantrum because once they start shrinking the balance sheet and slowing down the money supply, I think the markets are going to be caught off balance completely, and we will have a tantrum then. We haven't had one yet. They every time they talk about taper, the markets just shrug it off and don't do anything. And you saw today he talked about tapering. He did actually talk about tapering.
That's right.
He didn't specify when they were going to do it, or he kept all that vague and great Fed mystery, a crystal ball kind of thing. But the markets interpreted that as, oh, okay, he's going to keep the pedal to the metal. And
he's conditioning.
The markets went up, gold went up.
Maybe he's conditioning the markets to absorb the news when they do eventually start tapering their asset purchases. There won't be this big tantrum. Maybe he's just dropping crumbs here and there.
That's what they're trying to do. You're exactly right. That they're in this game of behavioral economics where they think that the guidance that they give out, that people actually believe that. Now people are going to start not believing it when that inflation number goes up in my 6 to 9% range. That is going to be the real time when people start scratching their heads and saying, God, the guy's been off base. This isn't temporary inflation. This is sustained inflation,
Yeah.
and that's when they're going to lose it, and that's when he's going to have to start pivoting and becoming a little clearer in his statements.
Well, you said that inflation could reach 6 to 9% by the end of the year. Are you suggesting that that is roughly when the Fed will start to take tapering very seriously by the end of this year? That's their timeline?
Well, I'm not saying whether they'll start tapering. I'm saying that that's when they'll start panicking.
Ah, so
When they start
they'll
still another, but believe me, if I'm correct, and I'm almost certain I will be correct on that 6 to 9% range, by the end of the year, his speeches will not include his statement that said, inflation, we've tackled that, we solved that. Now the only thing we have to do is look at the labor market and get that all fixed.
yeah.
By the way, the Fed really isn't in the business of fixing the labor market. That's another kettle of fish. But it is in the Employment Act of 1946 that they have to look at both the labor market, employment, and inflation. We've been burdened with that dual mandate since 1946. I wish we had a singular one like the old Bundesbank used to have. It's inflation, baby. That's what you watch. And to hit that inflation target, you watch the money supply.
All
That's
right.
the Bundesbank. I mean, these guys were real central bankers. Of course, the Bundesbank is long been mothballed and put in a museum in Frankfurt, but that's another story.
Sure. Well, let's follow up on the inflation story. I mean, there's plenty of new releases to follow up on from now till the end of the year. So we'll have you back on to help us keep track. Now, I want to talk about, before I talk about the gold settlement, I want to talk about this recent development in Cuba. I think I know what you're going to say already, but I feel compelled to ask you anyway. So let's take a look at this article here. It says here, Cuba to recognize and regulate cryptocurrencies. Just the first couple of paragraphs. Cuba's government said Thursday it will recognize and regulate cryptocurrencies for payments on the island. A resolution published in the official Gazette said the central bank will set rules for such currencies and determine how to license providers of related services within Cuba. The popularity of such currencies has grown among a technologically savvy group in Cuba. It has become harder to use dollars, in part because of toughened embargo rules imposed under former President Donald Trump. So Cuba is now, I believe, the second country after El Salvador. Well, they haven't officially made it, legal, but they're recognizing it now. So they're heading towards that direction. Does it surprise you that Cuba has also taken this route, or maybe they're facing similar problems in terms of their financial markets as El Salvador did?
Well, no. Well, there are two differences. One is El Salvador has a perfect system, the dollarized system. Since 2001, the economy has been dollarized. That's legal tender, and anything else, any other currency is also legal in El Salvador. In Cuba, they aren't dollarized. I mean, de facto, they're dollarized because you can't do anything in Cuba if you really don't have access to U.S. dollars. But at any rate, the peso is junk. So they're completely different. In a way, they're almost the opposite. You have a perfectly run system, the dollarized system in El Salvador. Everything works perfectly, and in Cuba, you have the peso, which has always been junk, and doesn't work, and isn't convertible, and just has every problem under the sun, including quite a bit of inflation now has popped up. So the magic wand is being waved in Cuba. This is supposedly going to solve all of Cubans' problems. This is the biggest joke. It's not going to solve any problem in that hellhole of an economy. So that's Cuba.
Well, if you're saying that the peso is, sorry, keep going, please. Yeah.
But you say, well, why are they doing? They have what the excuse. The excuse, we have foreign intervention by a U.S. president, sanctions that have been ramped up, And that's what's causing all of our problems. Forget it. The communist economy is causing all the problems. Sanctions are irrelevant. And the pesos that they produce there, which they are responsible for producing, is junk, and that's another problem. But then you ask the question, what's going on in El Salvador, Hanke? If the thing is working so well, being dollarized, why are they passing a Bitcoin law that, by the way, will go into effect September 7th? That train is rolling down the track. The Wall Street Journal, if you read it today, there's a nice article in there about all the risks that are going to be imposed on El Salvador and that the economy might just blow up. So why are they doing it? It's a little bit of a mystery to me. There's no logical reason for them to do it unless they've been conned by the crypto evangelicals and true believers into actually believing that this is somehow going to help the economy in El Salvador, which it won't do. It's going to put the economy at a lot of risk, and they clearly will, I think, ultimately be sanctioned because of this, because the international regulatory agencies will come down pretty hard on El Salvador, because El Salvadorian banks will be forced to use cryptos, and there's no way you can know your customer if you're using cryptos. So they'll be flagged and they'll be sanctioned. So there's just, the trouble is just starting in El Salvador. They're going to go from perfect to tanking. It won't have any effect on Cuba one way or another. It'll have no effect. Cuba's tanked a long time ago, and it's going to stay tanked.
Oh yeah. Well, I was going to say maybe the rationale, well, one of the rationales for taking this action is perhaps, like you said, the peso's in trouble. Maybe the currency is inherently unstable, and so they're looking for other forms of currencies to be introduced and to potentially help out the population, help out remittances and whatnot.
Well, yeah, that's the advertising. Remittances you can do more cheaply on Western Union than you can doing it through Bitcoin, for example. This is just a myth. These myths associated with the cryptos are just unbelievable. I'm making a long list. It's getting longer every day. I'm almost running out of paper and pencil to write the damn thing down. This is one myth. Remittances. We can lower the cost of transferring remittances if we go crypto, go to Bitcoin.
Well, maybe in the future with technological advances, maybe they could bring the costs down.
Well, the cost of using certain forms of Western Union transfers, by the way, are zero right now. How can you go lower than zero? I guess you could subsidize it. That's in fact what they're going to do in El Salvador. They're going to pay people to actually use Bitcoin. They're going to give everybody $30 to put it in their wallet as an incentive to use Bitcoin, because no one wants to use it. So the taxpayer is going to have to pony up $30 for every Bitcoin wallet that's opened up to entice people to use the thing. Now, what they'll do, by the way, they will spend the $30. Some might speculate, just hold on to the $30, hoping that it goes up. But they'll spend the $30 in Bitcoin, and that will be the end of it. And then they'll have to subsidize the thing and sweeten it up with another $30 or $50 or $100. And where does that come from? It comes from El Salvadorian taxpayers. This is the biggest con job that I've seen. And it's amazing that the Bitcoin crowd has conned the president of El Salvador into this. But I think his brothers are on the take, and I think he is. He's getting something out of this. You say, Hanke, why are they doing this? They're pretty much dark forces behind it. It makes no sense unless someone is getting paid. Someone behind the curtain is slipping greenbacks, not Bitcoin, into President Bukele's pocket and his brother's pockets. That's what I think is going on.
All right. Well, let's follow up more on this story as it develops in Cuba. Finally, let's talk about your Hanke Coffness Gold Sentiment Score. We've talked about this regularly on our program for several months now. You have an important announcement to make. It's now public.
Well, we anticipated this, and I did tell your viewers a few interviews ago that we would eventually get this refined and make it available free so that people could obtain it and put it on an app on their telephone and get a daily chart, a graph that looks just like what you're displaying there. So if they go to www.thegoaldsentimentreport.com, which is listed at the bottom of that goal sentiment gauge that you have up there, David, they will be able to apply and receive free of charge this daily sentiment chart. Now, the daily sentiment chart, by the way, it was very negative early this week. It actually was registering bearish readings of about 8, -8, -8. They have gone up substantially and caught this recent swing up today. By the way, gold's up about $25 an ounce. So
Wow.
we're catching things. People can get the gauge and see it. Now you say, well, Hanke, why would you want to be supplying this thing free? What's the deal here? The deal here is that we're running a pilot program. We're doing research on this thing, and we need people to be on the receiving end of this gauge so that we can interact with them. They can tell us how they're interpreting the thing. So this is a research project. I mean, it's for real. I mean, the sentiment score and the index, it's a real thing. We're convinced that it's rigorous and robust enough now that we're willing to supply it free to people who want to receive it, and they will be able to interpret the thing the way they want to interpret it. I mean, I'm giving you my interpretation right now, but anyone receiving it, they can look at it and say, oh, this is a bunch of baloney, or, oh, this thing actually helps us. And my view is it helps.
All right.
Otherwise, we wouldn't even be engaged in offering the thing.
All right. Well, Professor Hanke, I appreciate you offering this this gauge to the public now. Once again, you can find the URL at the bottom here, thegoaldsentimentreport.com, and I'll also put that URL in the description of the video. And thank you so much for your insights on Bitcoin and Powell today. I appreciate it.
I might stress that I have used the opportunity you've given me on Kitco to make this announcement as the initial announcement. This is the first time publicly that we've announced the ability for people to get the free Hanke Coffness Gold Sentiment Score.
Well, it's quite an honor to finally announce it here on this platform. So thank you, and I do hope the viewers make good use of this score and this indicator on a daily basis. So thank you so much.
Thank you.
And thank you for watching Kitco News. Don't forget to subscribe to our YouTube channel. I'm David Lin.